Hi, my name is Steve Bennett, and I'm the CEO of the direct property business here at Charter Hall. Today, I'm going to take you through some of the key considerations for investors exploring opportunities in unlisted direct property. Let's look at the first thing, understanding the fundamentals. Before investing into commercial property, it's essential to consider your own personal circumstances, financial goals, and seek professional advice to ensure that the asset class aligns with your strategy. Commercial property is driven by fundamentals that impact both income and long-term value, including location, tenant demand, lease structures, and broader economic factors such as interest rates and employment levels. Investors should understand key metrics like yield, rental growth, and lease duration to make well-informed decisions about the investment. The three core commercial sectors are office, industrial and logistics, and retail, and each can perform differently based on market cycles, tenant demand, and the supply outlook. Analyze the risks. All investments carry risk, and direct property is no exception. Always read the relevant offer documents in full and pay particular attention to the risk section so that you understand what risks are associated with the asset class and the investment product. It's also important to review the target market determination, or TMD, for any investment product you're considering. A TMD outlines the type of investors that the product is designed for, ensuring it aligns with your financial situation, objectives, liquidity, as well as risk tolerance. Look for quality assets with blue chip tenants. The quality of a commercial property investment comes down to two key factors: the asset itself and the tenants within it. Location, building design, sustainability features, and adaptability to future tenant needs are all critical. Equally important is the quality of the tenant or the tenants at the property. Government and institutional quality businesses with long-term leases reduce the risk of the tenant not being able to pay rent and the building becoming unexpectedly vacant. Understand gearing or debt. Another area to consider is whether the manager or the fund has an appropriate gearing policy and whether the debt level matches your own risk tolerance. At Charter Hall, we believe gearing for our open investment funds should be in most cases in the range of 35 to 45%. And finally, evaluate the fund manager's expertise. Look at the company that's managing the investment. A good fund manager actively enhances value by securing quality tenants, negotiating strong lease terms, and managing assets efficiently. Look out for managers with deep market expertise, property professionals who are located in the markets where the assets are owned, and who has a proven track record of outperformance. At Charter Hall, we have over 3 decades of experience in property investment and funds management, and we're the largest owner of real estate in Australia. We focus on quality, well-located assets with long-term leases to high-quality businesses. So, if you think direct property suits your investment requirements, I encourage you to visit our website, reach out to your financial advisor, or get in touch with one of the Charter Hall team. Thank you.